All right, we are now recording, and this is going to be the session on finding multifamily investments. And today we're going to break down into two different segments. It's different strategies on how to find multifamily investments, whether you're in the two different segments are going to be if you're looking for units that are 50 units or less or 50 units or more. So we're going to kind of break down both of those strategies on and where you would want to be able to find these. These are general ideas on how to find these general strategies on how to find these investments. Can you use some of these strategies and cross over them? Like, could you use a strategy that I'm going to give you in the under 50 units to find one that's over 50 units? Yes, there are some overlap there. But if you're looking at the bell curve, or where most people are finding projects in less than 50 or over 50, that's what we're going to cover today. Because I want to make sure that you have as much content and as much information available to you to be able to do that. So we're going to be going over some of the first steps that you have to take prior to finding these multifamily investments. And then we're going to go over strategies to find these investments. I'm also going to list a few online tools that you can use to be able to find some of these investments. And then at the end, we're going to give you a sneak peek into a software tool that our group, passiveinvesting.com, uses when we're searching for specific types of assets. And if you can notice real quick up here, there's actually a little bit of a hint. It's actually CoStar. So some of you have probably heard of CoStar before. You may have never had access to it, but maybe you've reached out to a property manager or a broker and they gave you a PDF document of a static form from CoStar about a property or whatever. I'm going to give you a sneak peek behind the scenes as to what it looks like to actually have access to CoStar and to be able to have that kind of data at your fingertips instead of having to go through a third party to be able to get certain reports. So it'll be a game changer for you. And I know you'll be excited to be able to see that sneak peek. So make sure you stay tuned towards the end to be able to get that. So first off, let's go ahead and talk about the under 50 units or more. So when you're looking at under 50 units or more, one of the best ways to start off is to have a list to actually work off of. And let me take just a minute to back up real quick before we start going over the strategies for finding them. One thing you want to make sure that you have set in place before you go to try to find these assets is make sure you are really clear on which investments or which assets you want to go after. So you want to say, am I going to go after the under 50 units or more than 50 units? And where is that amount? Our group has a dollar amount. So we are minimum 200 units or more, and then minimum 20 million in acquisition costs. So we want to make sure that we are focused on that. We're also very focused in that we're only buying 1995 to 2005 vintage that have not been renovated and have room for increasing in the rents by improving that community inside and out. And we want to make sure we hit certain return metrics as well. But from a very surface level view, when we're trying to search for assets, it's really the age of the asset, the type of asset class it is, because we want that B+ asset for our group. And we want it to be minimum 20 million in acquisition and minimum 200 units. And so that's what we've set for our criteria. So you just want to make sure that you sit down and set your criteria up front as well. All right. So less than 50 units, you want to start with that list, okay? And that list will be very important for you because it'll allow you to have something to work off of. And so when you go into the office and you sit down, or maybe you're working another job and you have a day off on Monday or Tuesday or Friday, when you sit down on that day off, you kind of know what to go after and what to tackle. And so you want to start off with a list. Now, some of you might be saying, well, how do I get that list? Well, I'm going to give you a strategy. So there's a website called Upwork.com. It's where a lot of freelancers are and virtual assistants are all across the world. I've used it for several different projects that we have, and they've been very, very helpful. They have ways to be able to monitor and track them to make sure they're doing certain work. But what you can do on there is put an ad out there for a job that you're looking for, what is called a web scraper, WEBSCRAPER, web scraper. And that web scraper, you will want to have them scrape the apartments.com website so they can actually create a query or a I guess you would consider like a web spider, if you will. And they'll scrape the apartments.com website in a certain zip code or area or market, and they will put all of those into an Excel spreadsheet for you within a matter of days, if not sooner. They could do it within a matter of hours, but sometimes setting up the process takes a few days if they're not used to it. And when you have them, this is the key thing, when you have them do that, have them cross-reference that data on the local county websites. So they can actually scrape the local county websites for owner data based on the address. So they can query it on the address and then put it straight on your Excel spreadsheet. And what that allows you to do is it allows you to see when was it last traded. It also gives you some ownership information that you don't necessarily get on apartments.com. And now you have it all on one spreadsheet. So using the upwork.com is a great way to do that. You can also probably just Google web scrapers and find one. Looks like Desh has one on there called web scrapers or scrapers.com. There's some information there for you. So there's different ways for you to be able to get access to these web scrapers. And it might cost you for that entire database, maybe $100 to $200, depending on, how much data you want them to be able to gather. But it also, when you get that Excel spreadsheet, it'll allow you to be able to filter down which properties and assets that you want to go after. And so if you know that if it's traded in the last 3 to 5 years, maybe you don't want to waste your time going after those because they just bought the asset recently. But anybody who hasn't traded their asset in the last 5 years or 10 years, you can use Excel to sort that data out so that you can actually filter down to just the assets you want to go after. So then your database might start with like 2,000 on that list, and you can whittle it down to maybe a couple hundred. So instead of wasting money and just blasting out a yellow mailer or some sort of postcard or letter to those people, you can now focus it on people you want to have access to their asset. And so that's one way to do it. The other thing you want to do when you have that list is to go drive those properties and secret shop them. Show up and see and find out which ones have some deferred maintenance or their property is running poorly from the internal side, from property management side. And it gives you a lot of information about maybe where are some of the pain points that this owner right now has that you could solve for them if they sold you the asset. And that's also where they might want to do some unique ownership or seller financing, if you will. Okay. All right. Let's see here. So sending the mailers, and then one of the key things is making sure that you stay on top of it and you follow up with those people. You want to make sure that you're following up with those people as you are sending out those mailers, and don't just send one piece of mail. You need to have a multi-step mailing sequence that you're sending out to them to always stay top of mind, because they get these types of mailers all the time. But if you can stand out by being the only one that's consistent with it, then you will stand out when they're ready to sell that asset. I know people who have hit people's mailing box every single month, and then 18 months down the road, that person calls them up and says, I called you because you were the only one that stayed consistent and continued to mail month after month after month. And you were the one I thought of when I just got finally fed up with my property and wanted to sell it. So it looks like I have a couple of questions here coming in. Can you please write down the name of those tools? Yes. So the first one was upwork.com. And I'll just type it into the box here for those of you who are coming in live. And then the web scraper one was just webscrapers.com. Looks like Desh put that in there as well. And then the apartments.com is the major website that is used to be able to market and list your apartment. Every property management company uses this, and every property uses this asset, this apartments.com to list their assets. So you can also use that apartments.com. And then of course, every county website is going to be a little bit different. So you just got to do some research in that locale of where that property is to be able to find some of that ownership information that you're trying to find. So good questions there. And how would you find owners where the deed is listed under an LLC using skip trace services? Yes, you can use skip trace services, but there's also some other ways that you can do that, Ryan. One of the things that you can do is if you go to the county website and you actually look at the deed, it's usually signed by the person who is the manager of that LLC. And so you can find that person's information and just try to find them either on LinkedIn or just searching for their name online or whatever. You can also call the property, and a lot of times the property management companies will give you the names and information and contact information of the parent company who actually owns it. And then I'm going to show you towards the end of the webinar today the tool I use with CoStar and how you can find that information and how it actually lists a lot of that data for you without having to use some third-party skip tracing services as well. So good questions there. Another thing you can do to try to find some of these lower than 50 units is using Craigslist. So Craigslist is a great tool to post your ads for apartments if you're trying to lease up some units, but it's also a place to go find some apartments, and you can use the filtering on apartments, on Craigslist to be able to find these as well. And you can pretty much tell when you call some of these people if they're fed up or not with their property. So you can reach out to some of those people, because a lot of these owner operators are posting themselves on Craigslist and putting their own information on Craigslist as well. Looks like another thing came in here. I find that even tax records indicate mailing address to the property management company instead of the owner. Do you ever use websites such as Reonomy or Prospect Now? So those are some other tools that I was going to mention that you can use that can find it. Those services are sometimes hit or miss as well, whether it's Reonomy, which is what you mentioned, the REONOMY.com. I've used them earlier about a year and a half ago. I used them and found it fairly useful. It's worth the trial that they give you to kind of play around and plug around to see if it's something you can use. But I have not used Prospect Now, but if that's a good resource, thanks for sharing that Justin. That's great. You can also, another strategy for finding these less than 50 units is going to the county websites and trying to find health code violators. And they usually have these posted on not every county has this or city, but some of these locales will have the code violators posted, whether it be at the courthouse or whether it be online. They'll have them posted, and you can reach out and find some people on there that are going to be fed up with their property because they have health code violations, and you can solve that problem for them by acquiring that asset. And again, the last thing I'm going to mention here is about follow-up. Make sure you follow up. So when you get this ownership information, make phone calls, send mail, show up at the property, and be consistent with that. If you just show up once, you're going to be just like everybody else, because everybody else only shows up once. Make sure, excuse me, I got a little hiccups there. Make sure that you put a follow-up sequence in place to make sure that you continue to stay top of mind with that seller, so the next time they're ready to sell, they're going to call you and not the guy sitting next to you. All right, so let's go into some of these larger assets. The larger assets meaning greater than 50 units. And if I was being honest, I would say probably greater than 100 units would be the best thing. Looks like Bharat has a question here. Does calling, texting, or writing to owners work? Yes, it does work. Obviously, I wouldn't blind text somebody, but I wouldn't mind cold calling them or sending them mail. And it does work, and it works all the time. And actually, there's been a few guests on my podcast. You can go to mfinpodcast.com. I'll type it in here to the chat box. But if you go to www.mfinpodcast.com, you can subscribe to that podcast, and I'd love for you to rate it and review it. It really helps me out. Helps let me know that you're listening and watching, or not watching, but listening to the podcast. But on that podcast, we interview people who are actually closing deals, and they've closed that deal in the last 12 months. We've had a few people that have actually used this strategy, these strategies that I'm telling you right now, to be able to get access to this. And now that I'm kind of talking through this, one of the other things that I didn't mention, and this can be applied to both the under 50 units or over 50 units, is when you talk to the property managers and start to build relationships with them, you can start to get a pulse on which sellers are in the process of selling or getting ready to want to sell or exit their properties. You can get a good idea before you even waste your time trying to reach out to them, build relationships. And one of our podcasts with Larry Abramowitz, he actually did this exact strategy and got a over 100 unit property that was actually offered to him by a property management company. And so it'd be a good thing for you to reach out to that podcast and subscribe to it and see some of those different ways that other people are finding their assets as well. So make sure you do that. So when you're talking about greater than 50 units, or really, if I was being honest, I'd say over 100 units or more, really working the brokers is going to be your best option for finding deals. And so you want to make sure that you figure out who are the main brokers in that area that are doing multifamily. And all areas have what are called multifamily specific brokers. That means all they don't do commercial, they don't do residential, they don't do single family, they don't do, self-storage. They only focus on multifamily acquisitions, and not acquisition, but multifamily sales. That's the broker you want to reach out to. And there's a lot of large groups out there like CBRE, Cushman and Wakefield, Marcus and Millichap, NKF, a lot of these groups, Capstone, that are out there in various markets that are focused primarily on large assets. And those are the people you want to reach out to right away and get on their email list. And even if you're focusing on the lower or less than 50 units, because eventually you're going to probably want to get to the larger ones, it'd be a great idea to go ahead and reach out to some of these larger multifamily brokers and get on their email list so you can continue to stay motivated when you start seeing some of these large assets that are being traded on a regular basis. And so it would be a very good idea to do that. But for those of you who are obviously actively looking for these 100 units or more, go reach out to the brokers. That should be the first thing you do after this webinar is just Google multifamily broker Atlanta, Georgia, and boom, a whole list of them will show up. And make sure you reach out to them and tell them exactly what criteria you're looking for. Now, if you're a little uncomfortable about talking to brokers because you've never done it before and you want to try to build your confidence up first, let's say you wanted to be reaching out to brokers in Atlanta, Georgia. What you would want to do first is find a market that's a couple of states away. So let's just say Dallas, Texas. Go Google Dallas, Texas multifamily brokers. Start reaching out to them and having conversations to perfect your criteria and to perfect your conversations with them. Because if you mess up, it's okay. They're not even in a market that you're going to be looking at anyway. So it's a great way to practice yourself is just call a different market and ask those questions. Because then they're going to probably ask you questions that you don't even know that was going to come at you and you don't know the best way to answer it. But you can now start to compile a list of those questions that are going to be thrown at you so you can be better able to answer those when you reach out to brokers in your existing market. So Brad's asking another question. How do I get them to talk to me? These brokers are fairly easy to get a hold of. Now, there's usually what's called a senior multifamily associate, and then there's also what's called a senior executive or an associate that's in these multifamily sales. And so if you can't get a hold of the main guy, the head guy in that department, then what you want to do is contact one of the associates because they usually have a lot more flexibility in their time and a lot easier to get a hold of. But if you start to get on these email lists, which a lot of these websites you can just go register for and say you want to be sending deals, and then you get the names and contact information on the offering memorandums of these people that are selling these assets. They list their information on there, emails, phone numbers, all of the like. And so you can start to reach out to them. The best way to get a hold of them and get them to talk to you is call them. Pick up the phone, call them. They're usually giving you their cell phone number, so you can feel free to text them, but get in front of them. And another good way to get in front of them, which is one of the other strategies, is to make sure that you do additional things to get in front of them, like take them out to lunch, offer to go bring them a cup of coffee and sit in their office and chat for a little bit. Go play golf with them, invite them to different golf outings. And once you start to actually build these relationships and then you start to get awarded deals and you start to close deals, the tables will turn. They will start to reach out to you. They want to take you out to lunch. They want to start having coffee with you. As a matter of fact, next week, our group got invited to go play Pinehurst in North Carolina with some multifamily brokers that we had recently closed a large deal with. We just recently closed about 2 weeks ago a large $51.5 million deal in Raleigh, North Carolina, which was our largest deal to date. And because of that acquisition, we're getting a lot of these brokers reaching out to us, trying to find out us and sending us a lot of these off-market deals that they're working on. So eventually the tables will turn and people will want to reach out to you more than you trying to reach out to them. But in the beginning, you got to get started as well. Thank you, Paul. I really appreciate that. Paul just texted in here into the chat box saying he just registered for the summit. So make sure you go do that between now and the end of the webinar today. Thank you again, Paul. Next thing here is Pinehurst. The other way to get in front of these people. So you talked about, how do I get them to talk to you, right? And the way you get some of these people to talk to them is go tour projects, go tour these deals that they're putting out. So number one, get on their email list. It's very easy to do. once you start to see some of these assets come across, go tour their properties. They give you opportunities to schedule tours with them and go tour the property, have that FaceTime with them, see how they interact. And again, if you're not sure and comfortable with that first, go to a market that's 2 states away. Go take a trip to Dallas and tour a bunch of properties and tell them you're an out-of-state investor and build those relationships and build that confidence that you need to be able to do that. Let's see. All right. So Richard said he's not sure how you're able to scrape ownership names and years owned off of apartments.com. So no, there's no ownership information, but that's why you want that web scraper to cross-reference it with the local county data. So they can actually use that local county data and actually match it up with the address on apartments.com and spit all that information out together. So you're using 2 different sources to actually combine them into one. So good point there. All right, so they're asking a couple of these things. What are some of the top brokerage companies? So I'll type in some of the top ones that I use so that you guys know. It's CBRE, there's Cushman and Wakefield. These are some of the ones that we've actually acquired properties from in the past. Cushman and Wakefield, Marcus and Millichap. And a lot of these also have market reports as well, that if you get on their email list, they'll send you their quarterly market reports as well. Here in the Carolinas, Capstone Apartments is another one, not to be confused with, I think, Capstone Capital, 2 different people. And then NKF, which is Newmark Knight Frank. Those are all the main ones that I can think of right now. There may be a few other ones. If you guys have any other ones that you guys want to share on the chat box, just change it from all panelists to all panelists and attendees, and you can type in there a few other ways to be able to do that as well. So there was a question here about how to find private investors to fund your deals. We've done a webinar on that before, Angel, so we're not going to talk about it today on this webinar, but if you go to our YouTube channel, you can find some more information there about it. So if you go to multifamilyinvestornation.com, you can actually, on there will be a link, a little icon for our YouTube channel, and you can subscribe there. And there's some other things on there as well. Yes, Sam said JLL. That is another one that we have as well. We haven't acquired one from them yet, but we're looking at one right now. So that's a good one as well. Let's see. Are you suggesting working with a web scraper for bigger deals? It's not as effective as what I've found. I haven't really found anybody that has used the web scraping idea to be able to find some of the larger assets. But that's definitely a point that you want to look at. Or you could try it, but I just haven't found it being very effective on the larger acquisitions, because you have to put yourself in a seller's shoes. Are you going to sell your asset off market to somebody if you could go to full market and get a higher rate for it, a higher valuation for it? Most likely you're going to get that at a higher rate somewhere else. And what I've also found with reaching out to some of these people, these sellers, is that they want to go through the original broker that actually sold them the asset. So it just depends on their relationship with that broker and things like that too. So you just want to make sure that you're cognizant of those various points. Priya's asking the question, can you please explain how to X-reference the apartment to the owner details, and how do you pick a submarket to invest? So there also is, again, some other webinars we did on how to pick a multifamily market. So go to our YouTube channel and you can find that replay for that webinar. And again, about the how to cross-reference them find the information. You're going to have that web scraper, go to apartments.com and scrape all the information for an area. And then you're going to have them basically query the county database for ownership information based on the address and the property owner name, not the owner name, but the actual address. And it'll be able to pull up that information, because most county websites, you put in the address of the asset and it'll populate the ownership information on there or give you some more additional information. So that's again, it's not a end all be all. It's not like 100% success with it, but you can get a good, 60, 70% accuracy with that type of service. And it really helps you kind of, save a lot of time trying to find those. So good points there. Let's see. Good. Are you suggesting? All right. Your thoughts on off-campus student apartments? It's not really anything in my wheelhouse. I don't do a lot. Actually, I don't do anything at all. Haven't invested in, haven't looked at student housing, so I can't answer that question. But I know I do have some people that always ask questions about that. So I'll try to reach out to a person who's done some student development or student housing and see if I can get them on with one of our webinars to be able to answer that question for you. So good question there. All right. One of the other things that I'll tell you before we go into the demo of the CoStar that I have here, one of the things that I would suggest that you do is go submit LOIs. So even if it's on an asset that you might not want, you want to still submit your LOIs. And even if it's at a low ball number, and sometimes we'll call the broker and say, hey, we know that, you're trying to get X, but we can only make the numbers work at, X, which is a lot lower than what yours is. Do you still want us to submit the LOI? And chances are that seller, that broker wants you to submit that LOI because it makes them look good to the seller that they've actually got more offers coming in. And sometimes they need those offers to, kick the reality into that seller that you can't sell your property for X because everybody else is coming in at X, or at Y, a little bit less than what they're wanting, or a lot less than what they're wanting. So it's always good to do that. The more they see you in front of them, then the better chances that you are going to have to be able to build that additional credibility with them. Do you think looking at properties with lower ratings or reviews on apartments.com or Google is effective to find more distressed or value-added properties? I think that would definitely be an opportunity for you to look at to try to find those properties. One of the things that's hard about apartments and reviews is that most people with an apartment only complain if there's something wrong with their apartment. So a lot of them aren't really giving you a lot of information about anything that's good. So a lot of times it's kind of skewed negative, but it's a good idea to try to test that theory out of maybe researching some properties in a particular market and seeing which ones have the worst reviews, if you will, or sorting by the lowest stars on apartments.com to see if maybe you can find some distressed properties that have some more value add. So good idea there. All right, so who's ready to dive into the CoStar demo? Let me see a raise of hands or say yes, yes, yes on, you can just raise your hand there, I guess, if you're ready to look at this demo, because I'm really excited about it. I really like CoStar a lot. From the very beginning, we didn't really do a lot with CoStar, but we realized very quickly that we really need to have this information. It is expensive, so it's not for everybody. And I am under a NDA and can't tell you exactly what I'm paying for it. But I do not get compensated for sharing it with you. I just feel like it'd be good for you guys to kind of see what we use and provide some of that additional value for you. So here we go. Let's go ahead and dive into this demo. And let's see, good. And here we go. So you should now be able to see this screen for CoStar, if you will. So if you can see the screen, type into the chat box, yes, 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 I can see it. Looks pretty exciting. Let me know if you guys are still there and with me. Looks like we have quite a few people on here with us live. So excited to be able to share with you about this demo. Awesome. Got quite a lot of people interactive. That's great. And which market do you want me to dive into? So how about you guys just start typing in which markets that you guys like, and the one that I can see, I will try to pull up the one I can see the most popular one on. I will see if I can pull some information up on that market. So it's like we got Atlanta, Chicago, Oklahoma City, Atlanta, Portland, Salt Lake, Houston, Detroit, Orlando, Jacksonville, San Antonio, Jacksonville, Columbus, Florida, North Carolina, Corpus Christi, DC, Savannah. We got markets all over the place. So I didn't see anything in California, so that's good. I didn't see anything in New York City, so that's good. With all the rent control that's going on there, there's too many people that are doing that. But it looks like Florida and Jacksonville, Florida is a market that a lot of people have been looking at. So what I'm going to do here is I'm just going to zoom right in to the Jacksonville market. And you'll see that as I'm zooming into the market here, you can see some of these properties that are actually listed here. And you can see it just starts to fill in. And this is before I even try to filter anything out. And so this is just showing you all multifamily only assets. And what's nice about this is that I can really dial this thing in to the assets that I want to find and I want to acquire. And so what I can do is I can go over here and I can type into this number of units. I can first tell them what's the minimum number of units. So I told you guys before that our properties, we're looking at minimum 200 units. So I'm going to take this minimum and make it 200 units. Now, I also don't want to waste my time and look at some of the number of units that are going to be too much for me, because there are some assets that are just outside of what our group can really handle right now. And so I'm going to take this down to say 2 to about 350 units. So we're going to take this to 350 units. And you'll see that as I do this, it starts to take away some of the properties. So these are all of the properties that have that between 200 to 350 units. Okay. Let me see. So we shouldn't be in California. This should be in, somebody just said they can see California, but the only thing that's on my screen should be Jacksonville. So is everyone else in Jacksonville just seeing that on their screens? Just type it in. Yes, yes, yes. All right, good, good. So these are all of the properties that are in that market that fit that criteria. That does not mean that these are for sale. So again, we're using this as a resource to be able to find assets that could potentially be bought or acquired off market. Okay. So this is going to be something that you would use not going through a broker or anything like that, but it gives you that information, that ability to find that data. So I'll show you this first. And then if we have time at the end, I'll also show you another resource within CoStar that allows you to get the market data from it as well and pulling market analytics and stuff. So so if you wanted to see how these properties are doing and as a market as a whole, I can go over here and click on analytics. And what this is going to do is tell me of all the properties between 200 to 350 units in that market, how are they doing across the board? Okay. So it's also giving me this market cap rate, 5.7% based on sales. Now, again, we haven't done anything yet to filter it based on asset class and, any of those types of things like quality of the asset or anything. Well, I'll show you how to do that in just a minute. I'm just showing you on a high level where this is. So here you can see the vacancy rate, 7.8%, market rent per unit, average market sale price per unit. And so it gives you a lot of good things. It even tells me how many under construction units there are, right? So all of this is good information to have on your properties. Then it also gives us a whole list of these KPIs about occupancy rates and absorption and delivered units and annual rent growth. It also gives you the projected rent growths as well. And so I'll show you how to get that data on some of these assets as well. Well, actually, you can see it right here, market rent growth, market rent per unit and rent growth. So you can see that the rent growth is going to be this orange. This is the rent growth year over year. You can see there the percentage is 5.5, 4.7. And then you can come over here past this black line. It's going to tell you what's the future or the projected rent growth in that market going to do over the next 5 years or so. So it gives you a lot of that future analytical data as well. It gives you some extra piece to be able to look at. All right, so let's go back to our map. Okay, we're gonna go back to our map, and these are all the properties. Now, I also don't want to find properties that are in the C class or D class properties. And honestly, I don't want A class. So I would rather have that sweet spot that our properties are looking at. We always look for in our properties, which is the B plus assets, but in those nicer class A areas. So we're going to go to this filtering button here. We're going to filter based on the CoStar rating. So I want to have at least a 3-star CoStar rating. And you'll see as I click that button, these properties will start to dwindle down. Okay. So I want at least 3 stars on that property. And let's see, year built, I want to be 1995 to 2005 vintage. And as I type this in, you'll see that these properties are starting to go away. So you see how it's kind of honing in exactly what I'm looking for. You can see that there's not a lot of properties that are fitting my criteria right now. So I might have to expand that criteria just a little bit. Now I'm also going to click on B class. And again, 2 more properties, done, gone, out of the way. All right. And so now I'm going to sit here and I'm going to see that now I have these properties that I can cherry pick from that are in this market. Right. And if you know anything about Jacksonville, you can kind of figure out which properties in which areas and submarkets are really hot right now. Okay. And so somebody just asked, what do the ratings mean? The ratings are based off of each CoStar is so expensive because number one, they aggregate data from multiple sources, but they have analysts on every market and every asset has an analyst as well that constantly follows up and calls them. And there's actually an on-site person that drives these properties to know about the areas and stuff like that. So they have their own rating system. It's not always accurate. If I was truly honest with myself on this filter, I could probably do the 3-star and the 4-star ratings. It would give me a few more assets to look at. But biggest thing is I want to make sure that I'm dialing in the ones that I want to be able to see. Does that make sense? So hopefully that makes sense. It's a rating for the building relative to other buildings of the same type throughout the country. That's what that's for. Okay. That's what it says on CoStar. All right. So let's go into one of these properties. So let's look at maybe this one right here next to the beaches, right? Neptune Beach, Atlantic Beach. And we're going to dive into this property. And what you're going to see is I can click on this property. It's going to show it to me over here. And if I click on it, it's going to give me a lot of data about that property. So it's going to tell me, obviously, how many units that property has, when it was built, the current vacancy, 2.1%. It's a phenomenal, vacancy rate. It's also going to tell me when it was last sold. So this one was last sold in July 2016 for $37 million and at $110,000 per unit. Okay, so it gives you a lot of information. So this property was sold 3 years ago, a little over 3 years ago. Do you think it would be a good time right now to be able to call this person? Maybe, maybe not. So that's kind of borderline for our group. Usually we like to see at least kind of five years or more for it last being traded. It's usually when it's a little bit more prime for somebody to want to be able to sell it. But it gives us that information, so I can look at this and go, nope, I don't want to look at it, right? So you can actually do that. And then some of you are asking me about, can I search based on it when it was last sold? I believe I might be able to. Let me see what this filter thing here says. Let's see. I believe it does have that. It might not. So it does not have the last sold date. It just has the sales price, but it does not have the last sold price. Last time it was sold. Not sure why. You'd think it'd be something easy. Oh, there it is. That's a sales comps. Oh, that's just for the sales comps reports. So that's not with this particular one. So you would think they'd be able to filter by that, but for some reason they don't have that listed here. So it might be hidden in one of these other, filtering things that they have. But for right now, let's go. The last sales date on there was for the comps. So it wasn't for this particular asset, which is kind of weird. But anyway, let's just, again, look at this property. It's a 2016. So because it's borderline 3.5 years, if they were doing a value play, they should be done with it. They should be leased up by now if they're at 2.1%. So it's probably in a perfect position and very poised to be able to acquire this asset. Okay. And so we can actually go to a couple of things here. My favorite tab is this analytics tab, but you can also go to the sale tab. And that again gives you the prior sales. So you can see that it was sold in 2006 for $28.2 million at $84,000 a unit. And then the cap rate was 6.08. And it was traded in 2016. I already saw that. It gives me the name of the buyer and also the name of the seller, which would match up to this one over here. Now, if I go over to this other button over here, contacts, what you're going to see is that this gives me, look at this. This is what's really cool. So it gives me the name of the owner, the true owner. So it's going to give you the name of the borrower entity that was created to be able to acquire the asset. That's called the recorded owner. But then they also have the true owner, which is the person that's actually behind the acquisition. And so this is the name of the management company that actually they have self-management on this property is what it looks like. It gives you their phone number, their fax number, their website. And this over here is the acquisitions officer. So this Greg guy is the one who acquired this asset for this group. So don't you think he'd be the one you want to reach out to? And look at that. You have his phone number and his cell phone number listed here. You could call him, you can text him, you can email him. And a matter of fact, you have his mailing address, you can mail him as well. So this is pretty cool. This is pretty good, cool information to have. The other nice thing that this CoStar does is it also provides on the right-hand side there, you can see all these photos of the property. So you can take a virtual tour of this thing before even going on site to it and have a lot of information. These photos are gathered from the CoStar rep. And look at this. Here, you thought I was crazy. Here's the CoStar property contact. This is the guy that's local to that market who's actually updating this on a regular basis and getting all this information for CoStar. And he's the one that goes out there and schedules to make sure these photographs are being taken and all that kind of stuff as well. So don't you guys go and try to buy this asset. This one looks pretty nice. I love Jacksonville. We haven't gotten one there yet, but we definitely want to be able to do this as well. All right. Let's see. So again, you get the previous owner's information, the previous contact information. So let's say that maybe this wasn't listed, which I've never seen it not listed, honestly. Let's say you had a hard time getting a hold of them. You could possibly call the sales manager who sold that company this asset because this is the previous true owner. You could reach out to them and say, hey, I'm looking to find the owner of this property because, we're looking to acquire their asset. I've tried to call Greg, that's the guy's name up here. I've tried to call Greg. He hasn't really responded. And so I'm trying to see if you can maybe connect me with him. Maybe he has a different phone number. Maybe there's somebody else over there that you can connect me to. And a lot of times that works as well. Okay. Let's see. So there's a question about CoStar has many different tools on their website. I'm not really sure what this one's called. I just know it's the analytics tool on CoStar. But let me see here. If you're interested, I can introduce you to my rep who actually helped me with this. Again, I don't get anything for referring or selling or anything like that. Again, I'm just providing this as a value to you. So if you wanted to, just shoot me an email, dan@passiveinvesting.com. I'd glad to be able to introduce you to our rep. If you want to be connected with somebody, they'll get you connected to somebody local to you that can come to your site and do a demo if you'd like as well and give you some more information. So going back to the property and the analytics I'm trying to figure out how good this asset is, I'm going to go to the analytics tab. This is my favorite tab. CoStar also has a iPhone app as well as a Android and also the iPad apps as well. What's cool about it is you can be driving down the road and go, oh, there's a property, and it'll already know where you are, and you can click the map on the map because it follows you, that property, get all this information on your phone, which is pretty cool to have all this at your fingertips in the field. So it's telling me the property vacancy rate here, submarket, 3 to 5 star range, and then the submarket itself as a whole, what their vacancy rates are. And because it's important to know kind of down to what that, submarket is and those asset classes in that submarket where those vacancy rates come in. Gives you the vacancy units, the asking rents per unit and the effective rents. And it gives you the 1 bedroom, 2 bedroom, and 3 bedroom asking rents. And then of course the sales piece here, the inventory across the market, the demand. And then it has a lot of these things as well. It gives you a daily vacancy rate that you can see here. And it also gives you historical vacancy rates. But a lot of times people will ask me and our investors, well, how did a property perform back in the last crash in 2007 and 8? And so you can actually click this little button here that opens this up that right now is only giving us now it's giving us a 10-year data, but we can actually go to which gives us all the way back to like the early 2000s. So you get this graph, the orange one is the one that this property did. And you can see across the board. So you have the Arlington 3 to 5 star, the Jacksonville, some market, and a market as a whole, and how it did up here. But what you can see is that this asset was very stable. It was actually more stable in the market than the market as a whole, almost throughout the entire time in history. You can see that here. And so this is a tool that you can use to see how did the property perform. And so if you look back in 2007 and 8, so here's 2007, had 6.9% vacancy. The middle of the recession at its peak, it was at 7.3% vacancy. You can see it continued to go down over time. And of course, this was probably when they were doing some renovations and had some lease ups or whatever, but you can see this historical vacancy and how consistent it is. And so it's really nice. It also gives you the historicals on how that market's going to do. So if you can see this property has always performed better than the market, chances are this property is going to continue to perform well, even with the current projections in that market as well. So wanted to give you a little bit of a sneak peek on what you can see with this property and this data, but that's how we do it. That's how we find some of these properties, whittle it down. And again, I'll do it for one other property here, and then we're going to be right up against a time crunch here. So let's see. I say with Jason's asking, what do you find is usually the best way to contact the acquisitions officer? I would say the best thing is shoot them an email, or first is email them. Call them. And if you don't get a hold of them, leave them a voicemail. And then when you email them, you can tell them that you called and left them a voicemail. And if you don't hear from them, you can always text them in a day or so and say, hey, did you get my message? Right. And then when you text them, send them your contact card on your phone so they can easily add your information to their phone, and they have your picture and they have your address and all your information, email, so they have all that information available to you. So Jason's also asking about, do you pay for certain markets or do you have access to the whole U.S.? So we actually have access to the entire US because the price difference for the multiple markets that we wanted to have versus having the whole United States was very nominal. And so if you want just one market, it is a little bit cheaper. It's still not cheap, it's still expensive. But then by the time you want to add on a second market, it's really just worth it just to spend the money for the entire US because it opens you up to everything. We actually have. So when I look to passively invest in deals, I also use this as a tool too. So like right now I'm in 18 different syndications passively. Well, before I got into those, I can go into here now and actually do some data research and figure out, is what they're telling me in their investor offering memorandum legit? Is it correct? Is CoStar kind of matching what their story is? All right. All right, so let's do one more here. We'll go across Jacksonville just a little bit here. Maybe go down here into, I thought there were some other ones that showed up. There you go. There was one I was eyeing on right here. And this one is Lee Meadows. Looks pretty nice. And Raj, I know you're asking about the cost. I can't provide that information. They actually have each one of their people under an NDA, so I can't really give that to you publicly, but if you want to shoot me an email, or I know a lot of times you can just Google CoStar and cost, and there's some forums out there that can give you that data. So I don't know a lot about Yardi Matrix. I know you were asking about that. So I know that it can give you a little bit more granular detail on like income and expenses and things like that, that CoStar does not right now. But I don't know the differences between like what it can and can't do. I think they're fairly similar from what I can tell. All right, so we can see here, it's not telling us when it was last sold. We can still go to this sale here. And here it says, no prior sale information. Prior sale information is not available. So what this means is that this is the original developer that actually still owns this property since 1997. So let's look into the contacts here and see. So you have no former owner. And it's because the true owner is this Vestcor Companies, and they're the original developer. But guess what? It gives me their address here and their phone number and their website, and I can reach out to them directly. Also gives me their property management information in there as well. And also, since when have they been managing that property? It looks like they've been on that property since November 2012. So again, we have data, we have information on how to get a hold of this owner. And this is a property that's, again, another one of the ones that's perfectly poised to be able to acquire it. So another good asset there. So let's look at one more, just because I'm curious, and I'm sure you probably are as well. Let's go in here, and there's another one that popped up right here. We're gonna look at this one. This one looked like a nice asset. This one was built in 1998, 4.5% vacancy, 288 units. And let's see, the Paddock Club Mandarin. This is a nice asset. Look at this thing. It's beautiful, hardy plank siding and all. Got a 360-degree of the pool and the exteriors and all kinds of stuff. So really cool that we can get all this information at our fingertips without having to go to multiple resources. So it's definitely a convenience. No information on sale. So let's look at this again and see. Looks like it was last sold in September 2013 to MAA, one of the largest REITs in the country. Real Estate Investment Trust, MAA. They actually bought the property in 2013. So they may be in a position to be able to sell this right now. And so we can go to the contacts here and find the true owner. And again, MAA has a lot of people in their property, in their market. I mean, they have over, I think, 100,000 units in their portfolio. And so it might be a little bit harder to get to the person direct on there. But again, there's their information. Reach out to them. Try to find somebody who's managing that asset and kind of go from there. So, and they might be ready to sell it now that it's hasn't traded since 2013. So, all right. How many deals were you in an LP in before you were syndicating? I was an LP in 5 different deals before I started syndicating on my own. And of those 18 different deals that I'm a passive investor in right now, of those 18, there's 8 different operators, because I had somebody on Facebook ask me that the other day, how many different operators are there? And so there are some operators that I like a lot. So I invest a lot more in some of those and multiple times. But I'm right now in 18 different syndications. So if you have questions about passive investing, obviously, you can go to passiveinvesting.com and jump on a phone call with me. Glad to be able to help you out and talk about what our group does, but also talk about some of my experiences and the do's and don'ts and what to look for in an operator if you're looking to passively invest as well. So, and no, I did not do anything JV wise on anything initially, Ernest. I went straight into doing the passive investing into some of these larger assets just because I feel like it's a lot lower risk. Well, that's all I have for you today. For those of you who were on the webinar early, make sure you go to use the promo code that I gave you to be able to register for the MFIN Summit. So go to mfinsummit.com, register for the next Multifamily Investor Nation Summit. And for those of you who are interested in, for those of you who are more interested in passively investing, like I said, go to Passive Investing, subscribe to my podcast. We look forward to seeing you on the, we'll look forward to seeing you on the next Multifamily Investor Nation webinar next week. And somebody was asking me, is it an online summit? Yes, it is an online summit. Might be crazy, might be weird, but we've now done this 2 times. It went off without a hitch. It's phenomenal, great reviews. So I would highly encourage you to register for that. It's coming up in January. It's a 3-day online live conference. All the sessions will be recorded, so you'll get access to the recordings as a paid attendee. But if you come live, you actually have access to the speakers, because all of the speakers will be speaking at the summit live as if they were at a live presentation or a live conference, so that you can have that interaction with them. And we also have some additional opportunities for networking that we've put together as well. So thank you guys so much. We'll see you next week on the next webinar. Thank you so much.